Hello, this is Julius from Basic Financials. This video is another bookkeeping video, but it's a specific thing to do with how to account for a vehicle that you might buy on hire purchase. Let's say you buy a van. So this is how to deal with the accounting entries and also through the life of that van and then when you sell it. I hope it helps with some. It's a tricky little accounting entry, but if you can follow through what I'm talking about, it helps with other things as well, because you might buy something with a loan. Just the double entry system, it'll help to sort of show what's going on with that. Have a look at some of my other videos on bookkeeping to get an idea of what double entry is. There's only about three at the moment, but this one will add to it. So let's say you buy a van for £24,000, including VAT. So that's £20,000 cost plus VAT, and you're going to buy it on hire purchase. So none of these. I'm just going to do a straightforward finance agreement where you're actually buying the vehicle. You own it once you've repaid your final payment. There's no balloon payments. You might pay a deposit at the beginning. I'm going to ignore a hire purchase fee, which there'll probably be a couple of £100 for signing the documents off. But forget about that. Let's just assume it's £24,000. That's 20,000 plus 4,000 VAT, and that you're going to pay a deposit of £4,000. You're registered for VAT. This is your business. Your turnover's over the 85,000, so you're registered for VAT, which means you can, because it's a van, you can claim back the VAT on that van. So your first entry is going to be to debit motor vehicles in your accounts with £20,000. The other debit will be £4,000 to the VAT account, VAT on purchases, which you'll be able to claim back on your VAT return. So you've got debits there totaling 24,000, so you need a credit of 24,000. And the credit will be to the hire purchase account. So you'll have 24,000 credit to the hire purchase account. Now importantly, those two debits are VAT applicable. So the 20,000 will go into the value of your purchases. The 4,000 goes to the VAT to be reclaimed. The credit entry of 24,000 to the hire purchase account is not VAT applicable, so that would be outside the scope of VAT. That's a credit entry. So on your trial balance, which we've talked about before, or what your accounts show at the moment, is you've got £20,000 motor vehicle in fixed assets. You've got £4,000 debtor, which is your VAT account. You're owed that in VAT because you'll claim it back, and you owe the finance company £24,000, and that's your liability. So that's your balance sheet. Nothing of that has affected the profit and loss account at the moment. It's all the balance sheet. You've got assets and liabilities. Now you're going to pay a £4,000 deposit. So that will be coming out of your bank. So it'll be crediting your bank. Remember, that sounds a bit weird, but it's coming out of your bank credit. Have a look at some previous videos to see why that is. And then you're going to be debiting the hire purchase account, which will bring the balance that's owed on that hire purchase account, the liabilities of 24,000, down to 20,000, and you'll have £4,000 less in your bank account. So again, we still haven't touched the profit and loss account. It's just a balance sheet. So now you're showing £20,000 in your fixed assets, motor vehicle. You're showing 4,000 debtor, which is the VAT, and on the other side you've got 4,000 less in your bank account, and you owe the finance company £20,000. Now, let's say you've got that vehicle over a period of 4 years, and you're going to pay, I've made some notes on this example, you're going to pay £450, let's say, a month. You're going to pay £450 a month for 48 months, basically. Now, an easy way of accounting for hire purchase is just to do it on a straight line. Now, what I mean by that is each of those £450 repayments is going to include some interest So you won't pay back £20,000. You'll be paying back interest and capital of £20,000. So overall, you'll be paying back more than £20,000, and that bit that's more is the interest, and you'll spread that equally over each month's payments. Now that might not technically be right, because on like a loan you would probably be paying more interest at the beginning than at the end, so gradually the interest bit would come down. But to make things straightforward, and this is quite acceptable, you can do it on a straight line basis, so each repayment is a certain amount of capital and a certain amount of interest. Now, in the example that I've just given with 450, if I can find where I've made my notes, get my magnifier, you've got, I can't see it, well, oh here it is, right, we got £416.67 each month would be capital. So if you do 48 times 416.67, that would be £20,000. And £33.33 is interest. So the two of those add up to 450. Now, the capital, so each time you make a repayment, 416.67 will go to the HP account to bring down the balance. So after 48 months, you will have brought that balance down to zero. Okay, there's something like 16p difference or something, but basically it will bring it down to zero. The £33.33 interest, that is a cost, it's an interest cost, and that goes to the profit and loss account, goes to hire purchase interest. So every time you make your hire purchase repayment, comes out of the bank, 450 crediting out of the bank, then 416.67 will go to the hire purchase account to bring that balance down. So those are both balance sheet. Now and then the 33.33 goes to the hire purchase interest in your profit and loss account. So that's your cost. So we are now touching the profit and loss account for the first time. Those entries are not vatable. Forget about those. So they're outside the scope of VAT, both the debits and credits. So that will bring it down. After 48 months, you will have repaid your vehicle cost and the hire purchase, and you will have accounted for the VAT. The VAT will have accounted for the hire purchase interest, and you'll have nothing left to pay. Now, in the meantime, you've had this vehicle in your accounts. What you would be doing is you would be showing, as I say, to start with £20,000 in the cost, and you would depreciate it. Let's say you are going to be keeping this vehicle for about 4 years, in line with the hire purchase agreement. You think that's how long it'll last you. So a common way of writing, well, you could write it off over 4 years, equal amount for 4 years. So you could do £5,000 each year. But more commonly, another way, well, let's say you will do that. You could do it on a reducing balance basis. I think I've talked about this before. So you could do 25% on the reducing balance. So the first year, you would be depreciating it by £5,000. What you would be doing, you would be crediting depreciation to date and debiting a cost in your accounts. So we're going to write it off over 4 years on a straight line basis. So your £20,000 is going to be reduced by £5,000 each year. You keep the cost in the accounts, the cost of the vehicle, and you'll have a separate code for depreciation to date in the balance sheet, which will keep building up each year. So after year 1 there'll be £5,000 on that account. After year 2 there'll be 10,000. After year 3 there'll be 15,000. After year 4 there'll be 20,000. So you'll have cost 20,000 and depreciation to date 20,000. So the net book value of that vehicle is zero. And in the profit and loss account, each of those 4 years would have had a £5,000 charge to the profit and loss account, and that gets written off in the year. That's your cost. Now, so you've got a net book value of zero after 4 years. Let's say you actually managed to sell that vehicle for £2,000, but your net book value is zero. Now, what you need to do is you need to take the cost and the depreciation out of your accounts. So you're going to credit the cost, £20,000, so that brings that down to zero. Debit the accumulated depreciation, £20,000, bringing that down to zero. If there had been a balance, it would have gone to an account in a profit and loss account called profit and loss on disposal of vehicles. There isn't in this case at zero because it's 20,000 and cost 20,000 accumulated depreciation, so it's zero. And then the £2,000 received. Now remember, let's say it's 2,400 you managed to sell it for, because you've got to pay VAT on anything you sell it on. Because you claim back VAT when you bought it, you've got to pay VAT when you sell it. So let's say it's 2,400. So of that 2,400, which will go into your bank, 400 will go to VAT on sales, where you owe the VAT man, and £2,000 will go to the credit side of that profit or loss on disposal of fixed assets. In this case, there was no net book value left, so you had naught on the debit, and then you've got £2,000 received against it, so you've actually made a profit of £2,000 on the sale of that vehicle because you've written it down to zero. And you've received £2,000 for it, so you've made a profit of 2,000. So that would be it. So you've repaid your hire purchase, you've accounted for your vehicle over the 4 years, and you've dealt with the sale and accounted for the VAT, and you've got a profit or loss on disposal. I hope that helps. You might go through the video gradually and step by step, and see if you can write down the entries as I've said them. In debits and credits, and you'll see how everything is tally and balance. I hope that helps, and like and subscribe if you can, and if you've got any comments or questions, put them in the box below as usual. And thanks very much for listening. See you again soon.